The start of a new trading year usually gives some sort of indication of what type of activity is going to occur during the year, or at least the first quarter. However, today was one of the first years that we ever saw a big drop like this, I guess since 1939 on the first day of the year. But it wasn't unexpected. Not necessarily the magnitude of the drop, but the direction was still, after failing at the top of the trend channel, more than likely going to come down and test the bottom of the trend channel, which we did in one day. However, as you can see, there was some buying going on at the close today, and there are still charts out there that are not falling out of bed with the market. Obviously, the place to be right now is on the short side, but at this point, now we have to see what they do with the market conditions tomorrow, as far as whether they're going to support here in this trend channel, which we've been observing for the last month and a half, 2 months, or whether they breach this level and start going down to a lower level. That same bounce occurred right off a support level in the NASDAQ, doing a hammer type signal. So we've hit the bottom of a trend channel. Our stochastics are still heading down, but we did a hammer type signal, a hammer doji type signal, and we know the simple rules of a hammer slash doji. More than likely, they're going to move the market trend in the direction of how they open the markets tomorrow. So if they open up positive, that tells us this trend channel has supported, and we're still waffling in this channel. And the utilization of channels as well as candlestick signals puts investors in high probability situations. As we can see, there's a little trend channel in our recommendation on NSR to go short. Today, with it gapping down through the bottom of the trend channel, told us there was no support here, that we might be in wave 3 to the downside. So obviously, with these market conditions still moving sideways at best, it's good to have short positions as well as long positions in the portfolio. Scotty, Solar City, as we can see, has come out of a big fry pan bottom, now doing the classic, the J-hook pattern. And we can see, identify reversal signals right here. This is our left-right combo, a doji followed by a bullish engulfing signal. And notice where it occurred, right smack dab off the 200-day moving average back up above the T-line. What's the usual results of this type of pattern? This is usually wave 1. This is the profit taking. This is the expectation coming out of a fry pan bottom. And what do we expect out of a J-hook pattern? That wave 1 and wave 3 will be equivalent. So even with the market selling off hard today, there was still buying going on in some of the solar stocks. The benefit of candlestick analysis is it can pinpoint graphically which sectors are being bought and which sectors are being sold. Happy New Year. Hope everybody has a prosperous 2016. And that can be done if you just use the common sense elements that are incorporated into candlestick analysis. See you in the chat rooms.